You glance at your portfolio, and there it is, Ethereum. Maybe it's green today, maybe red. But one question lingers in your mind: should you still be holding it? In 2025, after all the upgrades, all the promises, all the volatility, has Ethereum lived up to the hype? Or are you holding on to a dream that's already peaked? In the next few minutes, we're going to break down the full picture. What Ethereum has become after its major upgrades, what challenges it's still facing, and whether holding ETH today is a strategic decision or a mistake you'll regret. And it all starts with a single moment. Back in 2017, I bought my first Ethereum. I didn't even fully understand what it was. Just that it was the second biggest crypto, and everyone online was hyped. I watched it climb, then crash. It felt like gambling. But I held. Not because I believed, because I was too stubborn to sell a loss. That decision turned out to be one of the most important financial moments of my life. But not because ETH went up, because I started paying attention. What I learned was this: Ethereum isn't just a coin. It's a platform, a network, an entire economy. And what happened from 2020 to 2025 changed the game. Not just for crypto, but for how we understand value, ownership, and finance itself. Let's rewind a bit. Ethereum used to be clunky, expensive, and slow. During DeFi summer, a single transaction could cost over $100. Not exactly scalable. But then came the merge in 2022. Ethereum transitioned from proof of work to proof of stake. Energy usage dropped by 99%. Issuance dropped significantly. For the first time, ETH became potentially deflationary. And this wasn't just a green choice. It was a structural upgrade that changed Ethereum's economic foundation forever. Then came the Shanghai upgrade in 2023, unlocking staked ETH and turning staking into a viable strategy for passive income. Then Dankin in early 2024 brought proto-danksharding, massively reducing data costs for Layer 2s. All these upgrades didn't just fix Ethereum, they rebuilt it. By 2025, Ethereum wasn't just the original smart contract chain. It became the infrastructure backbone for decentralized finance, NFTs, DAOs, and tokenized real-world assets. Everything from art to loans to voting rights moved on-chain, and most of it touched Ethereum. But here's the twist. Despite all this progress, people still doubt Ethereum. Why? Because they see faster chains like Solana, cheaper chains like Polygon, buzzier chains like Sway or Aptos. Ethereum? It's the old giant, the slow one, the boring one. But here's what they miss. Ethereum is slow on purpose. Not because it's bad, but because it prioritizes security and decentralization. It doesn't move fast and break things. It moves cautiously and upgrades strategically. While other chains collapse under hacks and outages, Ethereum keeps marching forward. In 2025, over 60% of DeFi TVL is still on Ethereum or its rollups. Major institutions like BlackRock and Franklin Templeton are launching tokenized funds on Ethereum. Governments are experimenting with stablecoins and identity systems using Ethereum's framework. And banks? They're quietly staking ETH. Let that sink in. Ethereum is being integrated into the global financial system, and most retail investors aren't even aware of it. Now, let's address the elephant in the room. Ethereum is no longer the cheapest chain. It's not the fastest either, but it doesn't have to be. That's what Layer 2s are for. Arbitrum, Optimism, Base, ZK Sync, they're all built to scale Ethereum. And with rollups, now settling thousands of transactions at a fraction of a cent, Ethereum is achieving the scalability it always promised, without sacrificing decentralization. Think about that. Bitcoin can't run smart contracts. Solana sacrifices decentralization. But Ethereum? It's finding the balance. And balance wins in the long run. So, is Ethereum still worth holding in 2025? Let's look at three dimensions: tech, adoption, and economics. Technologically, Ethereum is evolving. With the next phase of the roadmap, Verge, Purge, Splurge, we're looking at faster sync times, lower hardware requirements, and better scalability. This isn't vaporware. These are active Ethereum improvement proposals, and they're being implemented. In terms of adoption, Ethereum is now more than just a retail playground. It's becoming the standard for enterprise blockchain adoption. When Visa experiments with crypto payments, it's on Ethereum. When Nike drops NFTs, it's on Ethereum. When decentralized identity projects look for a foundation, it's Ethereum. This isn't just network effect. It's real-world anchoring. And economically, ETH is now deflationary in many market conditions. Every transaction burns a bit of ETH. During high usage periods, more ETH is destroyed than created. That's like Apple buying back stock, but automatically every time someone uses the App Store. This creates long-term scarcity. And scarcity, combined with utility, equals potential upside. Now let's talk price. ETH is nowhere near its all-time high of nearly $5,000. But that's not the whole story. The ETH of today is not the same as the ETH of 2021. It's more efficient. It's deflationary. It earns staking rewards. It's the asset that powers the most used decentralized ecosystem in the world. Yet it's still under $4,000. That's like having Apple stock after the iPhone launch, but before the App Store boom. This doesn't mean Ethereum is risk-free. It's not. Regulation, competition, developer attrition, all real risks. But it does mean Ethereum has already proven its ability to survive, evolve, and lead. And in crypto, that's everything. Let me tell you a quick story. A friend of mine sold his ETH in early 2023. He was frustrated. The price was flat. The fees were still annoying. He jumped into Solana, then into meme coins. For a while, he made money. But by mid-2024, he realized something. Every new platform he used still referenced Ethereum. Every new innovation, modular chains, account abstraction, intent-based wallets, they were all happening first on Ethereum. So he started buying back in. Not because ETH was mooning, but because he finally understood what it was. Infrastructure, ownership, economic bandwidth. Ethereum isn't trying to win the hype war. It's building the rails. And in the end, rails make more money than trains. So the question isn't, will Ethereum 10x tomorrow? The question is, will Ethereum be the foundation of digital value in 10 years? If your answer is yes, then holding ETH in 2025 isn't just smart, it's strategic. Because whether you're staking, building, trading, or just spectating, ETH is the key that unlocks the most advanced financial playground the world has ever seen. And the deeper you go, the more you realize this isn't a coin. It's a protocol, a platform, a revolution. Now here's what I want you to do. Take a moment. Open your wallet. Look at your ETH, not as a number, but as a piece of the future. Then hit like on this video if you're still holding. Drop a comment below. What's your conviction level from 1 to 10? And subscribe, because in my next video, we're exploring which altcoins are building real value on Ethereum, and which ones are just chasing shadows. Oh, and if you're serious about understanding Ethereum's roadmap, grab my free ETH tracker in the description. It covers every major upgrade, staking rewards breakdown, and price level to watch in 2025. The future isn't just coming. It's programmable, and Ethereum is writing the code. Now let's build.